This video is an uncovered Japan company research report on global security experts, ticker 4417, also known as GSX. GSX is a Japanese pure-play cybersecurity firm with an unusual model. It trains security professionals, staffs them at clients, and channels that talent into consulting and vulnerability diagnostics. The business has strong growth and margins. The question is whether that quality can justify a valuation that already assumes sustained execution. For fiscal 2026, GSX reported revenue of 11.02 billion yen, up 25% year-on-year. Operating profit rose nearly 39% to 2.24 billion yen, lifting the operating margin to 20.3%. Return on equity reached 39.8%. At the research date, the shares traded on roughly 29 times forward earnings. This is a company with an unusually strong record, but not a conventional bargain. GSX sells security and only security. Its core cybersecurity business delivers consulting, vulnerability diagnosis, phishing training, and security solutions. Alongside that, it operates professional security education and Cyberstar, a staffing subsidiary that reskills IT workers for security and AI roles. The key is the connection between them. GSX trains people, deploys them at customer sites, and uses the expanding talent pool to deliver higher value consulting. That makes the product understandable as a system, not as three disconnected services. Cybersecurity remains the core, contributing around 7.1 billion yen, or 65% of fiscal 2026 sales, with a 36.9% gross margin. Security education contributed roughly 2.4 billion yen. Cyberstar staffing was smaller at about 1.5 billion yen, but grew 50% and earned the highest gross margin at 42.4%. Education supplies future talent and leads. Staffing develops and deploys that talent. Consulting captures high-value client work. The financial pattern is operating leverage. Over the 5 years to fiscal 2026, revenue compounded at roughly 26% annually, while operating profit compounded at about 50%. Fiscal 2026 revenue rose 25%, but operating profit rose nearly 39%. In a people-powered service company, the gap matters. It suggests the firm is spreading a skilled workforce over a larger revenue base, while moving clients toward higher value work. Fiscal 2026 net income reached 1.49 billion yen, up 47%. Net income tracks operating profit closely, rather than relying on large one-off gains. Over the longer period, cost of sales declined from 70.7% of revenue in fiscal 2020 to 63.8% in fiscal 2026, while SG&A also fell as a share of sales. The key watch point is whether this operating leverage continues as hiring and wage costs rise. GSX is asset light. At fiscal year-end, its equity ratio was 44.2%, cash was 1.64 billion yen, and interest-bearing debt was a modest 1.61 billion yen. More important than the headline ratio is working capital. Contract liabilities of 2.14 billion yen represent prepaid education and maintenance revenue. Customers fund part of the operating cycle in advance. That supports cash conversion, although the company remains dependent on people rather than physical assets. GSX's competitive position rests on evidence that compounds. Its Tiger Team vulnerability diagnosis service has been deployed at more than 11,000 companies. The training franchise has roughly 34,000 cumulative participants, and targeted email training holds top market share, including OEM supply to other vendors. Distribution is widening too, with sales partners expanding from 9 to 49. The limitation is scale. With only 221 consolidated employees, hiring and training capacity can become the speed limit. The external backdrop is unusually favorable. Japan is estimated to be short about 170,000 security professionals. New cybersecurity regulation, including the Active Cyber Defense Law passed in May 2025, raises the importance of prevention and capability building. AI is both opportunity and risk. GSX says its SecOps.ai tooling can reduce security operations effort, while AI-assisted diagnosis can shorten delivery time. But faster AI progress could eventually commoditize parts of the expertise that GSX sells. Management's midterm plan targets fiscal 2028 revenue of 17.2 billion yen and operating profit of 3.85 billion, implying a 22.3% operating margin. The fiscal 2027 revenue guide is 13.78 billion yen, putting the near-term path in view. The plan rests on AI-era services and a national rollout through partners and regional banks. For investors, the practical question is simple. Can GSX keep hiring and training enough people to sustain growth above 20%? At a research date price of 3,850 yen, GSX traded around 29 times forward earnings and 13.2 times book value. The forward earnings multiple is near the sector average, but the book multiple is demanding. The report's 3-year scenarios run from 2,400 yen in the bear case to 5,100 in the base and 7,250 in the bull case. The downside is mostly multiple compression rather than an earnings collapse. Global Security Experts is a focused cybersecurity company with a distinctive talent flywheel, high margins, strong returns on equity, and multiple structural demand tailwinds. The counterweight is clear. Growth depends on people, and the valuation depends on the company sustaining unusually high returns. Track hiring and training capacity, operating margin progress, delivery against the fiscal 2028 plan, and whether AI remains an enabler rather than a substitute. This is research for education, not a recommendation. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.